Good afternoon, ladies and gentlemen. Welcome to the Keystone Law Group PLC half-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it is appropriate to do so. Before we begin, as usual, we would just like to submit the following poll, and if you'd give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from Keystone Law Group. James, Ashley, good afternoon.
Thank you very much, Jake. I'm James Knight, CEO of Keystone Law. These are the results for the half year ending 31st of July 2024. Just for those who are not entirely familiar with Keystone and its background, this is a law firm regulated by the SRA, the Solicitors Regulation Authority, a firm that I founded myself in 2002. Since that time, we have enjoyed a journey of growth, whereby we have now reached the point of about 550 lawyers that are operating as part of Keystone. Keystone is an unusual firm in as much as our lawyers operate from their own offices, wherever that may be, at home or otherwise, even the client's offices. And sometimes our lawyers are self-employed and we operate on a simple paid when paid remuneration structure, which effectively means that they receive a high percentage of the fees for work undertaken. The lawyers themselves, certainly the senior lawyers, who we call principals, introduce 98% of work to the firm. And they do so because they wish to take advantage of all of the resources and the infrastructure that makes up Keystone. In this way, our lawyers benefit from all the freedom, flexibility, and autonomy of being self-employed, combined with all of the conventional infrastructure of a mid-sector law firm. And that best of both worlds is in many ways what has made Keystone so successful. We make good use of technology to help to drive efficiencies and to improve economies of scale. As I mentioned earlier, the firm has grown well since in our 22-year history and continue to do so. Growth is predominantly by way of the recruitment of those principal lawyers. They have good client backgrounds, they have good legal backgrounds, they have good client followings. We vet them extremely closely. We're extremely selective as to the lawyers that we take on. We only really take on the best, and we only take on the best lawyers with the best clients to bring to the firm for themselves and for their new Keystone colleagues. 30% of the work is cross-referred from one lawyer to another, and which effectively means at £100 million almost turnover, it's a considerable amount of work is cross-referred through the firm. This is a profitable firm. We're cash generative. I believe this is a low-risk business, excellent track record since IPO in 2017. Many people believe that this is the operating model of the future in the mid-sector commercial law firm world where we operate. That is a sector worth about £10 billion. And so we have a very significant opportunity for growth from where we are at the current time. Moving to the results for the period that has just gone, I'm pleased to report that the turnover revenue was up 8.3% on this time last year. Adjusted PBT was up 7.2%. Operating cash conversion, which is always quite a strong as a result of this business model, was at 106%. The business is debt-free, and we have 8.3 million in cash. I'm also pleased to announce that we will be paying a dividend of 6.2 pence per share for the period that has just gone. Recruitment activity, as I mentioned to you earlier, is the fundamental driver of growth at Keystone, a very important metric, and the KPIs are all positive on this time last year. We took on 30 new principals during the period, 16 new pod members, and I'll explain a little bit on that in a second. And total fee earners have reached 557. Pod members are junior members, are junior lawyers who are recruited by the principals. Because our principals are self-employed, we contract with a service company that they set up. That service company can in turn employ junior lawyers to help improve the earnings of the senior lawyers. They become Keystone lawyers and have Keystone email addresses, etc., and are covered by the work undertaken by the firm in the usual way. Turning now over to and focusing a little bit more on the recruitment activity of the firm. As I mentioned, all the KPIs are positive, both in terms of the applicants. Now, this number 153, it is refined applicants. It is vetted applicants. It's not just people who sent through a CV. These are people that are of interest, and then they go into the pipeline. We then interview, we assess, we see if there is a good fit, much in the same way as a conventional employer. Yes, we do not employ, but we are responsible for the work that is undertaken, and the lawyers of Keystone reflect upon Keystone and the most important thing for Keystone in driving quality and driving our brand, reputation, everything is to ensure that we deliver a fantastic service to our thousands of clients. And that starts with the selection of the lawyers. Principals 30 I mentioned, and the pod structure remains a very important growth factor for Keystone as we take on more and more sophisticated work. I'll pass over to Ashley Miller, our CFO now, who will take you through some of the financial highlights.
So as mentioned by James, revenue in the period grew 8.3%, taking us to 46.5 million. The gross profit margin was 26%, and we had adjusted PBT up 7.2% to 6.1 million. That represented a margin of 13.1%. The operating cash flow of 106% remained very strong. The first half is typically stronger than the second, and our long-term average is just between 90 and 100%. Net cash at the end of the period was 8.3 million, with adjusted EPS of 14.6 pence, and we're paying an interim dividend of 6.2 pence. Just giving a bit more detail behind some of those numbers. So in terms of the revenue growth, the 8.3% growth was driven very much by the recruitment of new principals, with the average number of principals increasing 7.6% in the period. Whilst we've also seen a continuation of revenue growth per principal, which was up from 105.5 to 106.3 thousand in the period. The gross profit margin of 26% was down marginally from 26.2 last year. The reason for that is that the margin-only business that we get, which is through our lawyers in the Isle of Man and our centrally employed lawyers, remained flat year on year, as we saw the growth coming entirely from our principals and the pods. As a result of that change in mix, that impacted the margin slightly. In terms of the overheads of the business, we continue to invest. We are a business that needs to continue investing in both people and the various facilities and infrastructure we provide to our lawyers as we continue to grow. So we saw growth in headcount in the period from an average of 63 to 69, which was up 9.5%. And again, the investment in retaining and attracting the best and brightest that we need to support our leading lawyers goes to inflationary rises in costs as well. Within the other admin base, the increase of 7.6% very much reflects that growth in the lawyers and the volume there. Finance income remains strong in this period compared to last year, as we've seen interest rates remain high for longer than people had anticipated in many cases. So overall, we've ended up with a strong growth in the adjusted PBT of 7.2% to the 6.1 million, and the margin at 13.1%. As I say, the step down or the move down slightly from 13.3% last year is really the effect of that flow through of the mix at gross profit margin. Moving on to the balance sheet, we are a debt-free business and remain cash positive with net cash of £8.3 million at the end of the period. The alignment of interest that the pay-when-pay model has on the lawyers very much reflected in the debtor days, which were 33, pretty much consistent in this business in the low 30s. It was 32 at this time last year. The payables, just to reiterate, because we have the lawyers are on a pay when paid, there is a correlation between the debtors and the creditors, as a circa 75% liability to the lawyers is always outstanding on any debtor balances. This year we re-signed our leases, so we have 2 floors in our offices in Chancery Lane. In April, we re-signed those 2 leases for a further 5 years, which means from the balance sheet perspective, we have now recognised again the right of use asset for the entirety of the 5 years, with the correlating liabilities for leases on the other side of things. And again, for those not familiar with the business, the intangible asset on the balance sheet relates to the way that the private equity investment in October 2014 was structured and has no investment in the business. Excuse me. The investments there relates to our investment minority stake in KeyPoint. I noticed one of the questions raised during so far has been in relation to that, and that was revalued last year, which is the reason for the step up in the value there. Corporation tax is a feature this year, both in its absence on the balance sheet as a liability and also a big step up on the cash flow. And I'll come on to that in a moment. But from a cash flow perspective, the business is fundamentally cash generative, which by its nature is such, and that's representative all the way down, really, with the cash conversion being very strong and with negligible outflows thereafter. In terms of the outflows thereafter, CapEx was very small. We are actually in the process of doing refits to the Chancery Lane offices, which is why those of you who read the analyst notes will have seen there is a forecast increase in CapEx this year of a further 0.7 in relation to those fit outs, which will flow through in the second half. Corporation tax steps up because as we've grown as a business, we've now moved through the boundaries which HMRC set for becoming what they define as super large, the advantage of which is entirely for HMRC, I'm afraid. Up until the point we were super large, we were on quarterly payments whereby half of the tax charge for the year is payable in the following year. However, once you're super large, you have to pay all of the tax in the financial year. That means in this transition year, we've had to pay the second half of last year's corporation tax plus half of the tax for this year in this first 6 months. So we'll end up paying 1.5 times the tax bill this year. Pure cash flow acceleration, as a result of which there's a cash outflow or an additional cash outflow of circa 1.6 million during the period. On the lease repayments, there's very little cash outflow in lease repayments in this period because as a function of re-signing the leases, we have some rent-free periods in there for 6 months. Which will benefit from that. And the dividends represent the payment of the final ordinary dividend from year end.
Thank you, Ashley. So I am delighted to say, to bring you these results, which we are pleased with. The performance across all KPIs has been strong. The demand from clients, the legal market demand has been buoyant, and yet the recruitment market has not been too competitive. That has helped us to pick up, to recruit the sort of lawyers that we are interested in recruiting, helped in no small way by the increasing reputation that Keystone has in the legal market, and the strength of our brand generally. I'm confident that the market forces, the market conditions will continue in much of the same vein as for the rest of the year, and that we will be able to bring results that are slightly ahead of market expectations in 6 months' time. So thank you for that. I see that we have some questions that have been submitted on the Q&A function, and I'll be happy to run through those, and Ashley and I will do our best to answer fully those points that you have made. First of all, Richard L asks, how do you closely vet 550 lawyers to ensure that they provide a top-class service to clients and comply with the rules and regulations? A very good question indeed. It starts with recruitment. We select in every way as rigorously as an employer would do for the employees of a law firm. We assess CVs. We meet with them usually in person on a number of occasions. Questions are asked. We look at particularly very strongly the legal background of these potential lawyers, the clients that they are hoping, expecting to bring to the firm. And obviously this is a sector, the mid-market law firm sector is an area we know extremely well. It doesn't just finish there though, because as with a conventional law firm, compliance, managing risk is an incredibly important part of what we do. And for that, we have a team, a compliance team, who is there very much to help our lawyers, to help them to maintain compliance, and also to be there if there are any problems, any complaints, etc., to assess if something does go wrong or what went wrong. It's a huge part of what we do, but a fundamental one at the same time. And I think that we do it very well. We have a very good claims record and a very good reputation in the legal market, in the conventional legal market, for being a very real operator, a very good law firm with great integrity and one that delivers great service to our clients. A question for Ashley coming up. Have you ever thought of reducing the share of the revenue that goes to Keystone, as in increasing the share that goes to the lawyers? If not, can you please explain why? Ashley, I think you're on mute.
There we are. I'm off the mute now. So the margins we operate are we feel appropriate, quite frankly. So when we first started, well, when James started the business, perhaps he was slightly more generous than he might have been. But where we are today is really where the market as a whole has settled. It's certainly we have to work hard to ensure we return a decent margin to shareholders, which we believe we do, and a good return both in terms of the margins, the capital growth, and the dividend stream that we generate. But certainly now, having established the margin where it is, as in the 25% of the share, we would be loath to try and touch that. It would have, I think, massively detrimental effect on the business were one to start tinkering with that. We have a single deal. Everyone has the best deal in town, and really that's how it should stay.
Yes, and The margins that the firm make give rise to the net profit, which is it works for everybody, and it's I think it's considered very fair. A couple of you have asked about the gross figure and the net figure of principals. Also a very good point. We did recruit 30 new principals during the course of the 6 months just gone. However, the net figure is 10. During that period, we had 20 leavers. That is not unusual. The vast majority of those are made up of retirees and possibly some that have joined and did not make it work. This does happen. About 5% of the, 1 in 10 of the joiners do not make it work. Maybe they've come from in-house, they don't have the clients to bring over, but we and they think that they have the contacts, etc., to build up a client following. Usually they do, sometimes they don't. I would just mention add to that the average of the 20 lawyers that left in terms of their revenue is likely to be less than the average of the 30 lawyers who joined us once they get going. So it is a progression in the right direction.
Someone's asked about the valuation of KeyPoint and assuming metrics, etc., and dividend streams. As I highlighted, we did revalue KeyPoint upwards last year following a small raise they did. So we're confident that it's reasonably valued in line with its current valuation. In terms of future payment of dividend streams, the business will have to make its own decisions on that, but it's not a significant part. It is we don't really report on it because it is insignificant in the quantums of the group, and to make assumptions in terms of looking at the metrics we have in Keystone today as a fully scaled business versus a business in a much earlier stage of its development is not a comparable, I'm afraid.
And yes, following on from that, KeyPoint being the Australian entity, international expansion, as asked by Arthur B, is not on the horizon any more. Australia has been successful, and it is operating in the name of KeyPoint rather than Keystone because of licensing, the fact the name was taken in Australia. It has been successful, but for various reasons, we have determined to focus for the future on the domestic legal market in the UK, partly because it is such a significant market, £10 billion, and there was such a great opportunity that is got a long runway for us, and this is where we have chosen to focus for the time being. Another question from David B. You appear to have started the 2H with a strong recruitment. Are there any color on the sector trading you can add, please?
Not particularly. We've grown. I mean, the mix of business across the year in the first half, the mix of business has looked very much in terms of the shape of the business has looked very similar to that which we experienced during last year. So there's been no significant shifts or changes to the shape of Keystone as we stand. We've been fortunate enough to hold up demand across the firm and see no particular outliers either from a positive or in a slowdown perspective.
Thanks, Ashley. And Ashley, another one for you. What are the limiting factors that could result in Keystone being unable to grow its principal numbers further? And do you have any sustainable target of new principals to recruit per year?
Well, I'd say there aren't really any limiting factors. The market, I suppose, is the only limiting factor, but as it is a 11 billion pound market, there is no foreseeable limit in that. Obviously, at any given point in time, we are limited by the number of high quality lawyers, and that is the key function here, is the caliber of the lawyers who are looking to move across and become available to market. We will always focus on maintaining that caliber, because it is that which will drive and continue to drive the sustainable long-term growth of the business, and continue to position us as the leading business in this subsector of the platform law firms.
Thank you. David B asked whether we would contemplate assisting clients source litigation finance. We do undertake some work for clients that is financed by litigation finance. The process of sourcing the financier is often assisted by our lawyers. It's a matter of for the client to source this, the finance that's needed, and often we will be able to provide some help and give some direction in doing so. Charles Robert asks who pays the professional indemnity premiums. Keystone, in that respect, operates very much like a conventional law firm. We are a regulated law firm. We are responsible for all of the work that is undertaken by our lawyers. It is irrelevant the fact that they are technically self-employed. What is the relevant factor is that they are doing the work in the name of Keystone and under the coverage of Keystone. Keystone is therefore responsible for all of the insurance premiums. We have coverage of £50 million at the current time.
And in terms of our risk profile, insurers, you ask about underwriters, how they assess our risk. We have a very good risk rating as with the insurers and our underwriters. So we're well priced.
A few of you have asked which branch of the law is more successful, whether we target any specific sectors in our sort of growth plans. In actual fact, with this particular model, there are no sectors or sections that are more profitable than any others. Essentially, our gross revenue, our gross margin of 25% is the same whether it operates in, let's say, the conveyancing sector or in the corporate sector. Some areas of law are slightly more administratively heavy than others, but that's something that really just goes into the mixture, the mixing pot, so to speak, and we are fairly agnostic. We sometimes, if we get a collection of lawyers in a particular area that will identify opportunities, then we will certainly apply budget centrally to helping them raise awareness and develop opportunities in that particular sector.
Lawrence C's asked in relation to the numbers of offers made versus the numbers of applicants in the period, and it appears there's an increase in the percentage. We reiterate that these are not subsect of each other, so the 56 offers made weren't 56 offers made to the 153 candidates who were applicants in the period. So I'm afraid it's just a question of timing. They are the 56 offers made during the period would have been to candidates, applicants in the period, but also to those from a prior period. So there's not really much more to read into that, I'm afraid.
David C asks whether we can give more color as to the drivers of revenue per principal. A very good question, in as much as the revenue per principal is an important factor that we track and report on. It's not actually directly relevant to our financials in some respects. because our principals are not employed by us and not an overhead. However, it's a very good indication of the average amount that principals are, let's say, billing at Keystone. I mean, that is an average that ranges from, it is approximately 200,000 at the current pounds per annum at the current time, and rising. It does vary and mixes from much less than that to over £1 million per principal. So whilst it is an average and by no means a cap or even a sort of a norm, revenue per principal does track up, obviously in line with inflationary issues, increases in hourly rates, but also as a result of the increased, let's say, mainstream nature of Keystone. A lot of the lawyers that joined us, let's say, 15 years ago, were looking to work in a much more flexible, part-time basis. Now, the vast majority of lawyers who join us are looking to work in a much more full-time, sole breadwinner basis. And so as a result of that, and the pod concepts as well, bringing in junior lawyers to support the principals, we do, and we expect to continue to see revenue per principal tracking up. Ashley, I think you're on mute again.
So a question about lawyers being notoriously poor at invoicing and how do we handle this? Well, clearly the model itself is self-policing in that respect. Lawyers are on a pay when paid basis, so until they A, invoice the client, and B, the client pays the bill, they won't earn any money. So quite frankly, the combination of their partners, their bank managers, etc., they're highly motivated to bill on a timely basis. And what I mean by that is at the appropriate point in time, when it is right to invoice. So we don't have any challenges in that perspective.
Yannick has asked about the cost base of our lawyers. Sometimes Keystone is described as a plug and play operation. By that, it means that lawyers who effectively wish to operate their own business can do so should Keystone accept their application and effectively operate their own business through Keystone. This is what they are. They establish a service company. They comply with our manuals and obligations, but subject to that, by and large, when it comes to where, when, how they work, they have a great deal of freedom and autonomy. At the very basic level, in terms of cost exposure for these individual lawyers joining us, it can be very little. A lawyer who wishes to operate from their own office at home will have little more expense than the purchase of a laptop from Keystone, which is then provided fully set up and ready to go. And there is nowadays, as you're well aware, very few extra costs that an office needs other than possibly a printer and a scanner, and even that is often not even required nowadays. Equally, lawyers that wish to adopt a more ambitious approach to their work at Keystone can take an office and employ junior members into their pod and undertake a much more significant level of operation, which of course is more expensive, but equally can yield much greater net revenue to them at the end of the day.
David C's asked about whether we're seeing an increased cost relating to developments such as AI and other tools. As a business, we continue to invest both in people and in all of the sorts of resources necessary for to support our lawyers and enable them to operate as they would in any other leading mid-market law firm. So we do see a continuation of investment there. We always have invested and continue to invest. With the particular reference to the point on AI, we would emphasize that we're not a software house, so we're certainly not out there building the next bit of kit for generative AI, but we are, through access to the various knowledge banks, tools we provide, gaining access to the various AI tools which those software houses are developing, whether that's the likes of LexisNexis, whether that's Microsoft, whether that is in NetDocuments. So we are gaining access to those things, and obviously they will continue to be reflected in the prices of those softwares. But we see that as a part of the future and just another part of the ongoing investment required to deliver and support our lawyers.
Richard L. asks, how do you win larger, more profitable work where teams of lawyers required, where I think it means where teams of lawyers are required when your principals work from home? I would mention, Richard, that not all our principals work from home. Some operate from our actual central office. Some have their own offices. But even so, as the world saw during the pandemic time and the lockdown, law firms were conventional law firms, even the largest law firms were undertaking significant pieces of work with everybody working separately from home. Now that we are free of the restraints of the lockdown, of course, there is a much more allows for a much more beneficial hybrid way of working, where people can all meet together in the office when necessary and operate from home when they are able to do so, or from their own office. Many of our pods will rent office space so that the pods will all be operating together in one office, and yet they will still bring in other ancillary lawyers, such as the property lawyer and the tax lawyer and the employment lawyer, to help them complete a larger piece of work. So we regularly have 20 lawyers working on a single piece of client work, whether that involves pods. It's likely to involve juniors. But of course, in a conventional law firm, people are operating from their own desks. They're calling each other by the telephone, more likely just by the email. They're emailing each other. And occasionally they are meeting in a meeting room together to discuss a particular sticking point. We operate really in many ways, we absolutely operate in exactly that way. And of course, in the post-pandemic world, we are helped significantly by the use of Teams, Zoom, etc.
Okay. Charles C asks how we manage part-time lawyers. I support clients in their absence. The model doesn't really work like that. It's not that lawyers are part-time and they sign on for this time and they work a number of hours. The lawyers manage their relationships with their clients, so they have the flexibility to work around the needs of clients. And so even if they are not going to be working full-time, flat out every day of the week, they are fully responsive to their clients. They are aligned with the interests of their clients, and consequently they manage their lives to fully deliver the requirements of their clients. To the extent that they bring in resource from elsewhere, everything is totally open and communicated to ensure, again, that the clients are serviced as well or better than they would be in any other conventional law firm.
Thank you, Ashley. Ashley Gavin K asks, what is the average cost to recruit a principal?
It really depends on the channel they come through. So we operate through 3 channels. The direct, which is very much minimal cost per lawyer. We're talking there about response on inbound, response from lawyers following reaction to our presence in the market, brands, LinkedIn campaigns, etc. We pay, if the other channel is our lawyer referrals, and we pay our existing lawyers £5,000 for introducing a colleague. And if we recruit through the agencies, then that will depend. We have a deal linked entirely to as a percentage of the billing generated by that lawyer after them joining. So it's a fully flexible amount. So it can be as much or as little depending on how successful they are. So the key thing is, again, it's flexible, very much aligning with the rest of our model in that respect, that it's linked to success.
There was a question here asking, what is the results? What is the implications, the changes brought around as a result of COVID and the lockdown? I would say that the pandemic and the resulting lockdown effectively brought the platform model law firm about 5 years into the future rather quickly. In other words, prior to the lockdown, there was a lot of interest in this way of working, but generally some lawyers, quite a number, feared that they would feel isolated working in this way. There was also a tendency to think that proper law could not be undertaken except by operating from the law firm itself. Now, we knew that neither of those issues presented a problem, but at the point where the pandemic occurred, it was obvious that that was going to become known by others. As a result, the platform concept has grown quite significantly, not just ourselves, but other firms that operate in this same model. We're very happy to see other firms operating in this same way because it presents a very real option for lawyers now to consider when they're moving away from the conventional private practice law firm. We're very happy for these options to exist as long as Keystone is the market leader. And that is very much the position that we hold within what you could describe as this sub-niche, as in the platform law firm model sub-niche. And that has been extremely helpful, as indeed has the widespread use of Zoom and Teams and so forth. And the tremendous demand that exists within the legal profession and business as a whole for more flexible working, for more remote working, for greater variations. So all in all, that and winning Law Firm of the Year award during the pandemic, which being the top law firm award that any law firm can win, has left a very helpful legacy for this firm. And I think I might just finish with a final question, which is quite a pertinent one to finish on. Charles Robert asks, what is the long-term future? The long-term future of Keystone? Obviously a very difficult question in a way, but also one in which I think that I'm extremely optimistic for. We're finding the legal profession is moving in the mid-sector at quite a pace in the direction of the platform model, the Keystone model. What I mean by that is, in essence, the concept, the idea is gaining more and more popularity. as it is such an effective way to provide clients with a really excellent level of advice. It is absolutely feasible, if not preferable, for large teams of individuals, of lawyers, to undertake very sophisticated levels of corporate work to the client's satisfaction. For Keystone, we are able to grow without cash flow difficulties. We operate a paid when paid model, so growing our lawyer numbers quickly is very feasible and without restrictions in the same way that other conventional organizations often have when it comes to office space. So the scale, the size of the market, and our ability to scale are all good. And that is really why we are very optimistic for the future. On that note, I think we have gone through all of the questions. Excellent questions. Thank you for those, and thank you very much for attending today's seminar. I hope you found it useful, and we are here to help at any time in the future. Thank you very much. I think we will pass back to Jake now.
Perfect. James, Ashley, that's great. And thank you very much for your presentation and for being so generous with your time then addressing all of those questions that came in from investors this afternoon. Could I please ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Keystone Law Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.